and welcome to a hot steaming Indianomics. I say that because 2023 is, I believe, the hottest year in India's history, and 2024 threatens to be worse. Today we discuss what this means for India's power sector. Should we expect power generating companies to become more profitable? And what else becomes more profitable? Should one invest more in, say, power equipment companies, power contractors, capital goods makers? And also, what about the downside? Can we expect intermittent power outages that mar production and productivity across the economy before capacity catches up? Joining me to discuss all these are Mohit Bhargava, the former Executive Director, NTPC Renewables, and former CEO of NTPC Green Energy; Girish Kumar Kadam, the Senior VP and Group Head of Corporate Ratings at ICRA; and Nikhil Nigania, Director and Senior Analyst at Bernstein. Gentlemen, thank you very much. This is a power-packed panel in more ways than one. Mr. Bhargava, if I may start with you, the Indian Express just reported that power utility heads in Punjab and even in central utilities have warned that there is a chance of a grid collapse because peak demand is absolutely racing up. I mean, 89 gigawatts or something at one particular hour. Do you think we are in danger of power outages?
First and foremost, good afternoon, and thanks for having me here. No, I'll not be that scary in my outlook because over the past 1 year, NTPC included and the government as a whole have been quite focused on ensuring that there is enough capacity. While I agree totally that, if I remember correctly, on the 30th of May,
Yes.
India had recorded the highest demand of 250 gigawatts. And over the whole of June, we have been looking at about 233, 235 kind of gigawatt kind of demand. But we have been able to meet that. The challenge is not in not having capacity. That capacity is there, and thankfully this time even the thermal plants are quite comfortable on the coal sides, and we have had a lot of solar coming online. So from that angle, we are in a decent position to meet the demand. But yes, as the demand keeps increasing, if you look at last year, the demand growth was over 7-8%. Same looks the case this year also. And with the economy growth projected at 7% for this year, and maybe at the same levels in the years going forward. So power capacity has to keep on catching up and ensuring that there's enough demand.
Okay. Nikhil, you have a note on how the power intensity of GDP is actually set to rise. So do you see more shortages before capacity catches up?
Sure, Lata. So our view, one is the demand side, second is the supply side. So power demand, actually not just India, globally it's been surprising on the upside. Reason for that, weather. So as you said, India, very warm weather we are seeing the last couple of years. And as per government, the global forecast, World Meteorological Organization forecast, likely to be warm for the next 5 years as well. Second driver of power demand then is new use cases of power. In India, not so much right now, but incrementally going forward through data centers, EVs, and possibly hydrogen in the future. So those are the stuff which are driving power demand faster than many anticipated globally. Now, coming to the supply side of things, the challenge we see is not per se the afternoon times of the day, the challenge we see the evening time of the day, where we feel government has thrown everything possible at the problem in the month of May, which was election month. And still we were just neck to neck. I mean, the peak demand afternoon was 250, evening was 236, and we barely met it. And if it keeps going at 6-7% per annum, the planned thermal addition of 8 gigawatts a year might not suffice unless battery and pump storage really picks up.
Okay. Okay.
So combination of these two things, evening shortage and strong.
Yeah. Okay. Very briefly, Girish, you would agree. Mr. Bhargava is not so dire that he sees outages, but Nikhil says that we are going towards a demand-supply gap. You would agree?
Yeah, I agree with Mohit Bhargava's observation. So it's not that scary. So certainly, India is witnessing a very strong energy demand growth. Last year, it stood about 7.6%. We expect energy demand growth to remain at about 6 to 6.5% even this year, which is again higher vis-a-vis the 10-year historical average. So certainly, the demand trends are pretty solid. And that is also because of the heat wave conditions and the climatic conditions that are being witnessed in most parts of the country. So, in fact, the first quarter data itself shows that more than 10% demand growth on a YOY basis.
Okay.
Now, and which is why there is a demand supply imbalances which is happening in certain pockets. Now, to address that, what is really required is to step up, the base, load, supply, which is a coal-based generation, and that is where the PLFs have to go up. Where we have already started seeing, the thermal PLFs, going up. In fact, we see the thermal PLFs to touch 70% at all India level this year. So that is one.
Okay.
And more than that, what is also required for the state utilities is to proactively, tie up, the short-term PPAs, medium-term PPAs, more in a timely manner with the GenCos,
Okay.
so as to ensure that, the supply is there
Okay.
whenever there is a consumption rise.
Okay.
Because renewable scale-up doesn't help at the moment because renewable is still intermittent and it is not getting stored and RTC is still not there because of the economics.
Yeah.
So,
So-
which is why these two things would be really
Yeah,
important.
I guess before elections, governments were active, but that hyperactivity and alertness perhaps needs to continue. I want to continue with the economic impact and the economics of the sector, but we have a large stock market audience listening to us. So, Nikhil, which part of the power universe is best placed to take advantage of an imminent seller's market?
For sure. So if you look at the power value chain, we break it into three buckets. We break it into the utility companies, where we continue to like NTPC Power Grid as key beneficiaries with higher than expected capex, leading to strong profit growth over a long duration. The second bucket, which gains where at least we see strong institutional investor interest, is the capital good names. Because a strong capex, especially on pockets like transmission and distribution, is likely to lead to good order book and margin expansion for transmission equipment suppliers. The third pocket are the lenders, where you have power-specific NBFCs in India. And the same thing then trickles down, right? I mean, if you're going to do so much capex, then you need a good amount of debt funding for them as well. And even the bad debts which are there are likely to be reversed. If the demand-supply situation is tight, the thermal assets could get sold.
The
and provisions would be
unfortunate
reversed.
part in India
So all
has
three
been-
pockets gain per se are coverage.
Okay, I get that. Thanks for that. But just power financiers, a word more on that, Girish, since your look at debt and that's of more imminent interest to you. Do you foresee once again people reneging on bills? Even now, the DISCOM outstandings are not falling. They have been on the rise. Do you foresee that? I mean, the demand may be there, but it is not backed by the ability or at least the inclination to pay.
Yeah, so Lata, in fact, thanks to this late payment surcharge scheme, which was notified 18 months back, we have seen a very encouraging trend so far. As far as the correction of the overdues are concerned, they are getting paid out, to the, GenCos, more or less in a timely manner through EMI route, thanks to debt funding availability from PFC, REC to the, the DISCOMs, whoever has participated in the LPS scheme. And again, as far as the regular bills are concerned, the DISCOMs are more or less, paying in a timely manner, within 70 to 75 days. In few instances, with some more, higher days, but it's broadly, more or less in a timely manner, thanks to the provisions of the LPS scheme, which are pretty stringent. Because if the DISCOMs do not honor in a timely manner, there is going to be a curtailment in the open access scenario for availing the power through short-term, medium-term, and long-term, route. So that is working out. But fundamentally speaking, many of these state-owned DISCOMs, they continue to, have, structural issues in terms of higher cost overheads, still inadequate tariffs. The tariff hikes are pretty modest. In fact, less than 1 or 2%.
Yeah.
Consistently seen over the last 2 years. And while the subsidy flows have certainly improved, but the fundamental issues in terms of the higher AT&C loss levels and the higher operational cost overheads, and the fact that the debt burden is now higher because of the LPS scheme implementation. So these issues continue to persist, for the state-owned DISCOMs. So we see that the cash gap number for the DISCOMs to still remain elevated, again, because of, the higher dependency on the short-term power, because short-term power mix has also gone up. Almost 15% of the generation is now through short-term power route, which is a bit costly, almost 5 to 5.5 rupees a unit. And on top of that, the coal import dependency is also relatively in the range of 7 to 7.5%. So, which is why the fundamental issues, they require a significant correction for the discoms going ahead.
Yes, we were running your cash gap, the difference between the cost and what is recovered by as revenue is still 45 pice per unit. I mean, that's something that should be alarming and can accumulate and hit at some point. Time permitting, I'll come back to the financing aspect. I'm missing a policymaker here, but Mr. Bhargava, you'll have to fill in that position. There was talk that IEX rates are actually at, 5 rupees 30 pice, 5 rupees 29 for quite some time. And there was talk that maybe Grid India should take over the demand supply and, marketing of short-term power requirements. Is there any such policy being mooted?
Honestly, I wouldn't be able to comment on that, Ms. Venkatesh. But the fact is that IEX and the short-term power market is definitely doing well. There's of course also talk of market coupling and all that. So the idea is that while the discoms do not actually want to get into a long-term liability, and you might also see that through a lot of bids coming for short-term power procurement, say few months or 12 months or a couple of years, not like 25 years. But there's also a very high demand, and which is what NTPC has also seen, that many states are actually looking at tying up long-term coal-based power, because the intermittency of renewables is something which everyone is trying to get over, and which is why everyone wants to actually shore up their bucket by tying up long-term baseline or baseline load capability also, which is why all this new coal-based capacity which is coming. And from that perspective, I see that like NTPC has already recently ordered about close to 6 gigawatts. And I believe a couple of other companies are also looking at ordering a few more capacities. So the overall demand supply requirement and the gap will be met, one, definitely through coal in the near future, and also on a longer term basis through renewables and round the clock power, storage solutions, and all these things will happen. So that's how to keep on happening.
Okay. Now, I want to touch base with all of you on where do you see policy tweaks or longer term policy changes. But Mr. Bhargava, you are a neutral party. There's one man who's rating debt and another man who is assessing equity. You tell me which part of the entire ecosystem looks promising to you.
You're putting me on the spot, because both these guys track the sector from specific areas and perspective. But you see, power sector is, if I may say, power sector is one where growth is happening and accelerated growth is happening. So whether it's the renewable sector, whether it's the thermal sector, I would also add, for example, nuclear on a longer term basis. So that will grow. And definitely the GenCos, the equipment suppliers, these are the people. And at some point I see that storage companies, for example, battery storage, or people who are also doing pump storage solutions, although that's a longer term solution that happens over a 4-5 year period. So these are the companies which will keep on doing well. Equipment space, definitely, because I don't have all the details, but for example, the 50 gigawatt bids happening on the renewable side. So there's a huge, and anyway, we see, we listen to you and other panelists also, the way the renewables people are, hand over fist, their prices are going up. I really don't know where that's headed.
Okay. Yes, there is a bit of, prices running ahead of financials in some cases. But I'm given to understand that not so much in power as much as it is in perhaps railways, aeronautics, defense, etc. But, we need to concentrate also on what the policy says, where can we see policy tweaks, and some of the other sectors like, rooftop solar, smart meters, all those questions coming to my guests after this break.